All right, good morning everyone. It is July 20th of 2024 and we have been talking in the Discord channel about the possible pullback within the market. And sooner or later, you can only go so high before a decision needs to be made. And that decision is very simple. You either go higher or you've got to pull back before you go higher. And that's what we were playing here, because when we look at SPXL here, you can see on the multiple time frames that from left to right here, this is the year, the quarter, the month, week, and then the daily. And we're going to keep it really simple here because that's what we like to do. We focus on the 4 ETFs. And for those four, if you don't know them, come and check us out at the Discord. But for this example, I'm going to show you SPXL. And we're going to start with the biggest time frame here for the year. And you can see that we hit all-time highs here. And we actually broadened, like Rob was always talking about, from the previous years, the COVID years. And so we broadened, okay? And we stopped all these players out here to the left for the last 3 years. So if you were short right here, you were forced to cover or possibly face the consequences of this thing running up higher. And as we drill down to the quarter here, you can see that we had this amazing move here from October of 2023, right? And we just kept going up and up and up. Here we got a little sketchy in 2023 in October, but then we recovered for the quarter and then we went higher, and this was our objective and we hit that. Okay, and once we hit that, we ended up going up just a little bit higher here for the month. And you can see this action here. This is that October area we were talking about, and how we set up for a 2-2 rev, and we went higher, 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 higher. We pulled back because that's what we do. We run, we rest, and then we run. And then once we got up here and we stopped all those players out, you're really going to see this action take place right here on the week, okay? And right here is that action where we tried to go higher and then they threw a nasty, nasty 3-bar right here. This right here was your red flag that we might be pulling back or getting ready to pull back, but sometimes greed gets the best of us and they tried to push it up even higher, and eventually what happens is you get price action like this where we try to go as high as we can and then they just take it right back down. And so within the group, we had a talk about how you can benefit from this. And, one of the things that we do is, again, we keep it really simple. And one of the questions that people ask me was, how do you know when the market is about ready to reverse? And it just goes back to those bigger time frames that you're playing the probability, because you'll never know whether or not it's going to do it. But this is one of the reasons why we have the 10-day moving average right here. And we keep it really simple, right? As long as price is above the green line here, we are in an uptrend. And then once we closed right here, if you were in that uptrend from here, you're closing your position and you're watching to see if we get a pullback through here. So that's one of the ways you can do this on bigger time frames, is just by trading above the green line or the 10-day moving average. Now this is a simple moving average and not an exponential. It is a simple moving average, and you can see that right here. Simple moving average. Okay, that's one way you want to do it if you like to trade the trend. Now, the other question that I've had recently is, how can you do intraday trading? And this is for more of the advanced trader out there. So this is the disclaimer. If you're not comfortable trading on smaller time frames, just stop the video right now. This isn't for you. But if you have the personality of where you feel as if you want to day trade or do intraday trading, and you want to close a position every day before the market closes, then this is probably for you. Now what we're going to do, we're going to take this same logic, okay? And basically what we will do, we are going to look at the bigger time frames here and look at the probability. And once we cut below this 2 right here on the week, let me maximize this. Once we took out this 153.76 right here, this is when we had enforced the 3-2-2 reversal to the downside. So anything below 153.76 was an area that we were interested in. So remember that, 153.76. So if we go down to a smaller time frame here now, on a 5-minute, yes, a 5-minute, we're going to mark 153.76, and we're just going to start by doing it this way. It doesn't matter where you shoot the line because we're going to come in here and mark it anyway. So 153.76, and this is price action for the last 2 days. And you can see clearly here that once we got into this area right here below this 153.76, first of all, we had this tremendous move to the downside. That's the run. And then we came back up and we rested, and then we cut through this again. And this is the run. So run, rest, run. This is what we talk about in the Discord. And it doesn't matter what time frame you use, it's going to happen on every time frame. But if you're going to do the intraday trading, just understand it happens a lot faster. So when we look at something like this and we know there's a probability of the market pulling back, if again we use just this simple 10-day moving average on a 5-minute, you can see that once price gets below the 10 here, then we are interested in trading this back down to where they want to try to break this thing down. And that's exactly what we got here, right? We got to move from here all the way down, and then we bounce, and then we cut right through it. And so one of the strategies that you can use for this intraday trading is very simple. Below the 10, I'm in short. And then what you're doing, you're following the price action all the way down until it crosses the 10 and closes above it. So like right here, that would be your out. So if you look at this on a bigger time frame, or not on a bigger time frame, but just by using that logic, you're in here and then you're out right there. And for that move right there, you're looking at a $4 move right here. Okay? And so some of the people in the group, all of us have different size accounts. And for some people, that might be 1 share. For others, it might be 10 shares. And for others, it might be 100. And the rule is this: trade what you're comfortable with. That's it. Don't over leverage yourself until you understand how to do this intraday. And it's very, very simple. Below the 10 and I'm in, right? And once you get that move, just understand that now you've got to work harder on yourself by not getting out of the trade until it tells you to, which is right here. And the best part about this intraday trading is that once you understand how run, rest, runs works, you can get to the point where you see it at a different level, where you see a big run, right? You see the rest, and then you see the run again. And so you could stay in this trade and wait for this to set up multiple times. And this was a trade that we actually worked on and took in the group, where we did the run, we capitalized, we got out, we let it set back up, and then the moment we got right here again, we got back in and we took it to the downside. This was all in 1 day. This was a beautiful setup where we got in 3 times. And then by the end of the day, we were done, right? Because the goal is not to carry it over to the next day, but to benefit from the majority of the move to the downside. And we totally killed it, and we benefited from that. That's it. That's how you do this intraday. Want to keep this short and sweet. If you have any questions, please let me know. And as always, I appreciate every one of you, and I hope you have a great day. Talk to you later.